Howdy. Welcome back to Dion Talk. The main thing I want to cover in this video is what to do when a recession's coming. Everybody keeps talking about a recession, and hopefully you understand that recession doesn't mean housing crash, doesn't mean you're going to be fired, doesn't mean things are going to cost more. It just means that as a country, we produce less in 2 quarters than we did before. So it's a reduced GDP. And I like the way Michael Zuber from One Rental at a Time puts it. The difference between a recession and a depression is a recession when your neighbor is laid off, a depression is when you're laid off. If we're going to have a recession, because pretty much everybody's calling for it, we're seeing inflation at rates we've not seen in decades. And I mean, imagine that. You print $120 billion a month, and the next year you have inflation. That's so weird. So when we hear things like prices are going up, fuel is up this much, food is up this much, housing is up this much, have assets actually increased in cost, or is your dollar worth less? Because we're losing value of the dollar every month. And you add to that, the people had to be bribed to return to the workplace. People were literally paid to stay at home. We had stimulus, unemployment, extended unemployment, extra unemployment. In Washington state, people were paid $75,000 a year to sit at home on the couch. So entry-level positions had to be increased to just bring people back to the workplace, which increased costs. So we've had a lot of reasons why prices are increasing. We've had supply chain issues with the pandemic. So there's a few things we want to think about with a recession possibly coming. First, have a plan for if there's a recession or if there's not a recession. Just because everyone's calling for it doesn't mean it's going to happen. Look at since 2013, since prices for properties went above where they were in 2008, look at all the people that keep calling for a housing market crash. So if you're watching YouTube channels that call for that crash, that keep saying over and over, don't take action, wait for the crash, wait for the correction, buy properties when they're cheaper, which doesn't happen or hasn't happened in almost 10 years now. So people who listen to those channels have literally missed out on 10 years of cash flow, appreciation, principal pay down, the tax benefits, waiting for something that we don't have the reasons in place that caused the last housing crash. A recession can impact housing, and it can impact an investor. So I'm not saying don't plan for it. I'm saying plan for both outcomes. I like that Michael Zuber and from One Rental at a Time and Matt the Lumberjack Landlord last year anticipated a recession coming. They actually increased the debt because we had low interest rates on assets that they had to get money set aside to be able to buy deals when they pop up in a time when people are distressed. During a recession, we might find more motivated sellers. So I have some advice on what to do if you're an investor who invests like I do and buy and hold real estate. There's 3 ways that I normally talk about when it comes to reaching financial freedom. The first one is starting and growing a business and getting it to the point where it's large enough for someone else to run the day-to-day and you don't have to be there to work every single day. I didn't do that route because I'm not an entrepreneur. I am an investor. I'm a good W-2 employee. I've been a Marine, a cop, a truck driver. So if you're starting and growing a business to grow it to the point where you can sit back and be financially free from that business, we need to plan for things like recessions. This means, just like with real estate investing, increased reserves, planning for price reductions and less business. What would you do with your staff? How would you maintain staff? How would you maintain profitability? This is not the time to be increasing debt on a business when we are expecting a recession. If you invest in stocks, another path I didn't choose, I have the bandwidth to learn one of the ways, and there's really 3, but crypto might be another one, or it might be one considered the same as stocks. But investing into a stock portfolio when we're expecting a recession is a time when I would back off, and I'm not a stock investor. So believe me, this is not advice. This is just what I see my friends doing who are stock investors. I would back off from investing in specific stocks, and I would be more diversified into a fund where it's several stocks grouped together. A lot of people are familiar with the 90-10 rule, taking 90% into your index funds, 10% into your single stocks. I would probably be even more conservative than that when we're expecting a recession, especially if you're one of the people who are living on the 4% rule. If you've reached financial freedom by investing 25 times your annual expenses, and then you can generally safely withdraw 4% of your income to live on, the idea being the average stock growth every year was 10% over a long enough timeline. giving you enough money to take out 4% to live on, 3% to cover inflation, which is a lot more than that this year, and then enough to cover the taxes. So this is a time to be a lot more conservative with that 4% rule. And in the last couple of years, people talked about it being the 3.5 or the 3% rule because we're living longer. So there's a lot of reasons to be more conservative with stocks. If you invest in real estate, my strategy doesn't change a lot if we have a recession anticipated. If you're a stock investor, you're familiar with dollar cost averaging, taking a set amount of money and investing it into stocks every week, month, quarter, whatever your schedule is, but keeping that investing amount consistent. So when stocks go up, you're buying less, and when stocks go down, you're buying more, but you're consistently investing the same amount. For me, real estate operates on almost the same principle. I don't care what's happening with prices. I don't care what's happening with interest rates, and I don't care what's happening with rents. I never look at one of those by themselves. I look at, as an aggregate, what is the yield on the deals that I'm looking for? What is the area average yield in my market? Because each market is different, and there's over 370 markets in the United States. So you have a local market that you would invest in. With real estate, I invest in almost the same format as dollar cost averaging. I save a down payment. So I'm not consistently investing the same amount every time because there's no way to find the deal the same time every time. But as I save, I continue to build options. I save more money for down payments, more money for closing costs, more money for immediate repairs, and more money for reserves. So every week that passes, every time rent money comes in, or side hustle money comes in, or W-2 income comes in, or the IRS calls and W-2 income goes out. Tax time. Awesome. I want to do a video where it's me as a real estate investor and me as a W-2 employee, because I'm both, talking to the IRS. And the cliff notes is the W-2 guy gets his money stolen, and the real estate guy pays nothing and actually carries forward a loss, even though they made a lot of money. I haven't scripted it yet. Definitely more tax benefits in being an investor than being an employee. I am saving up this amount and hunting for deals. The great thing about a recession that Mike and Matt got ready for was the motivated seller. It's entirely possible that we're going to see people who need to sell. There will be less transactions as prices go up and rates go up and rents haven't caught up yet. So we're going to see a lot of videos come out talking about a crash. Matt, the mortgage guy, was talking about one recently where he was reading from an article that talked about home sales have decreased by 4%. And he clarified that that doesn't mean prices have come down 4%. It means 4% less transactions. And that's what I think we're going to see a lot of. We're going to see a lot less people buying, a lot less people able to sell. If you're locked in at a 3% interest rate for 30 years and you want to buy a better house or a bigger house, but the new one is going to cost more and have a double the interest rate. I'm quoted on a property that I made an offer on, was it yesterday or the day before, at 6.8% interest. How do you sell your house to buy a bigger one if you're going to double your interest rate and pay more for the house? So we're diminishing supply even more because that eliminates two transactions. But this is when you really need to do the work. When we talk about one rental at a time, and we're talking about that new investor who's just starting, we always talk about 60 to 90 days to learn your market, do the work, understand what an area average is. What is the yield going to be on the properties in the area that you want to invest? And then you're going to look for properties that would perform better than that. But this is the time to really watch your rents. Rentometer is falling behind. The Housing Authority is falling behind. Even the Rentometer even switched from a 1-year historical model down to a 3-month historical model, and they are hundreds of dollars below what I'm getting for my units, and I keep my units below area average. I would almost at least once a week go to apartments.com, Craigslist, Facebook Marketplace, even Zillow or Redfin, and Redfin, anywhere people are posting rentals, and watch what's happening to the rentals. How long do they stay on? What price points are they going at, so that you're current on what rents are going to be in your market. Don't project a rent increase for next year just because we saw a massive increase last year. Where are the rents now? This is almost on a daily basis. Every week, watch that. As you're watching properties on the MLS, how long do they stay? Months ago, most properties, 90+%, almost everyone that came across my radar was gone in hours, was pending in hours. I've recently seen a few that stay a few days. That's what you want to watch for. The longer something sits on the market, the more likely they are to take an offer. that isn't at asking or more. There was an article that came out a couple of weeks ago where somebody was talking about Redfin announced 52% of deals or transactions happened above asking price. And a lot of people focused on how high a percentage that is, forgetting that that means 48% of transactions happened at or below the asking price. And now that rates have gone up, prices aren't skyrocketing as fast. So you're going to be able to watch the MLS and see properties that sit longer to find that motivated seller. And this is where I want to steal a page out of Matt the Lumberjack Landlord's playbook. Have your agent reach out to the seller and ask them what's important. What matters to them? Is it ability to close? Is it price? Is it timeline? Do they need time to live in the property so they can find the place they're going to buy? Are they in the middle of a 1031? Is there some other problem other than price that you can solve for that seller? Because now we've actually got some time to breathe and take action. As a recession comes, we're going to see more and more of that. And as we see more articles come up about recessions, you're going to see more buyer fear. And remember, quote Warren Buffett, be greedy when others are fearful. When you hear fear in all of the YouTube channels, news sources, that's the time to sit back. Don't take action because you're afraid of missing out. When people are afraid of missing out, that's when you don't want to jump in. You want to jump in because you found the right deal, and you have to be looking every day to find that deal. Same thing in business, in stocks, and in real estate. Have a plan for if business grows. Have a plan for if business shrinks. Have a plan for if your portfolio performs better or worse than you're expecting in stocks. Don't anticipate only one and plan for it. Even if you see almost all of your sources of information saying this is what's going to happen, until it happens, nobody knows. So figure out what your plan is. My plan, if prices go up, is to keep looking for deals. If I don't find those deals, my reserve and my savings keeps growing. If I find the deals, I invest the money. That doesn't matter if prices go up or down. It means if I find the deal. Those are my thoughts on a recession. No one knows if it's coming. If you say there's a recession coming, enough times over a long enough period, you will be right, because recessions are cyclical and they come and go. Kind of like when you have a YouTube channel that talks about a crash. I'm always baffled by the time that people put into watching content where people have been calling for that crash for years. Now, I get from 2013 to 2019, prices were going up and we had a lot of fear. But in 2020 and 21, if you watched channels that said there's a crash or a correction coming and that you shouldn't take action, imagine what you lost out on. Hundreds of thousands of dollars in appreciation in just those 2 years alone. It's not true. You can't sue a YouTube content creator. A lot of people show their age when they say things. And I say this when I'm on other people's channels. This content is for informational purposes only. It is not blah, blah, blah. If you're not paying the person you're watching, you're not going to be able to sue them. But I almost wonder if people could go back 2 years, find the channels that were screaming crash, that people stopped and didn't take action for, and sue that person for the hundreds of thousands of dollars that you missed out on. It's not a real thing. I just wonder sometimes.
I hope you enjoyed this clip from one of my long live streams. I do my live streams every Tuesday afternoon at 4 p.m. Pacific, and they last as long as the questions do. You can find the entire video here. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.